Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's good to be back.
Well, on Monday, a huge announcement. Newmont and Goldcorp announcing a merger that assigns a 17% premium to the price of Goldcorp. Now it'll be called Newmont Goldcorp, and they'll become the world's biggest gold miner. How does this merger affect the junior miners, especially people like Great Bear Resources, whose Dixie discovery is close to Goldcorp's Red Lake mine?
Jim, I have mixed feelings about these big mergers amongst the big gold miners. This is the second really big one. Last year, Barrick and Randgold announced that they were merging, and that closed on the first trading day of the year. And the issue I have with these mergers are the companies are trying to deal with a gold bear market that has been with us since 2011. Gold has, in essence, been sideways during this entire period, and they did all these acquisitions in that run-up 2010 to 2011, some even into 2012 and 13 before gold really got crunched. And then they've had to digest all the blowback from projects that were purchased with the idea of a gold uptrend, a long-term uptrend, perhaps parking gold above $2,000. So the thing that concerns me about this happening now is that by consolidating these big guys into larger companies and them all saying that, well, we're going to keep our very best and biggest operations and get rid of everything else, this pretty much wipes out the exit strategies for juniors. And we've already seen a negative implication in one case, ATAC Resources, on which Barrick did a pretty good deal a couple years ago on its Rakla belt, which has Carlin-type potential. And after spending $2 million, they simply handed it back and says, we're out of here. And in the case of Randgold, that doesn't really affect the Canadian juniors so much because Randgold is focused on Australia, where not Australia, in Africa, where the Australian juniors tend to dominate, and they get their exit strategies through the likes of Randgold, whereas Barrick has been more focused in Latin America, where the Canadian juniors dominate, and Barrick has pretty much pulled the plug on Latin America, and all this retrenching, that sort of leaves the juniors sort of, okay, who's going to farm into our projects, who's going to buy us out, and companies like Barrick have typically done exploration near mine sites and have historically bought out really big discoveries. They've been quite aggressive, and they've built up their reserves in that manner. And in the last 6-7 years, they've had good success in the Cortez Hills area, where they now have Gold Rush with its 15 million ounces, and then the higher grade but much deeper 4 mile structure. So in terms of Barrick, which doesn't normally do deals with juniors, and hasn't been doing many of these 19.9% strategic equity investments. They did do one with ATAC. It's sort of a wash that it has merged with Randgold and probably won't have that much more to do with the juniors. Newmont has never been particularly helpful to the resource juniors. It has a corporate culture where it's almost like heads I win, tails you lose type of attitude when it comes to deals with juniors. They almost always, when they're farming out something, insist on some sort of back-in clause, which is only acceptable to pump and dump lifestyle juniors who know that there's going to never ever be anything to back in anyways. And Newmont has never been aggressive in taking out major new discoveries, and every once in a while they have some sort of a hiccup and they do something crazy like way overpay, paying $2.3 billion for Long Canyon by taking out Frontier. It looked like they were sort of changing their stripes a couple years ago. They did what I thought was an impressive win-win deal with Gold Strike Resources on its Plateau project in the Yukon. And in early 2017, we actually did a Discovery Watch segment on that deal. But in the past 2 years, they have not reported any success of consequence whatsoever. That deal has a vesting deadline at the end of 2019. I suspect that Newmont will pull out of that project. So, Newmont, who cares? They haven't been much help to the juniors. Barrick's sometimes been a help when there's a very, very good discovery. But Goldcorp is another matter. Seeing Goldcorp disappear into Newmont is, in my view, a very bad development for the resource juniors. Goldcorp, of course, has grown out of the original Red Lake discovery where Rob McEwen's team was able to demonstrate that this, old mine, depleted mine actually had enormous high-grade gold resources left. And then, Rob McEwen kind of sat on the company and didn't do anything except, collect the revenues. Bay Street got kind of unhappy. They ended up, getting him to do an acquisition of Lewisman, a Mexican producer, and then Ian Telfer came in, and Rob McEwen eventually left. Glamis Gold got absorbed into it, and Rob McEwen has gone on with his McEwen Mining, which he's assembled a number of smaller companies into one, and it's sort of a fairly minor producer in the grand scheme of things. But Goldcorp became a powerhouse. It acquired the Penasquito project and developed it. It became Bay Street's favorite place to get an exit strategy for juniors that had made significant discoveries. Two recent ones are Kaminak and Probe, which were $350 million, $500 million buyouts where Bay Street got excellent liquidity. Goldcorp was also not shy in picking up this new trend where, in a sense, they're outsourcing their exploration activity by taking these 19.9% strategic equity stakes in juniors. These don't give them any rights to any of the projects in particular. Others have picked that up, such as Agnico Eagle, and but more recently, Goldcorp has been under pressure. It has started to disgorge some of these projects that they have acquired. A recent example is Camino Rojo, into which they probably sank over $400 million, and they sold it into a shell, one of Pierre Lassonde's shells, Orla Mining, and that ended up sucking up $80 million from Bay Street at a price that the stock has managed to never trade above in the last couple of years. So I think it is unfortunate that Goldcorp is being absorbed into the Newmont culture, and so there is one less major producer to support the resource juniors. Now, I do think this is temporary, and I regard it as a contrarian signal, because as I mentioned earlier, I think it's being driven by the fact that gold has been a lackluster performance. In fact, when you take $400 gold from 1980 and inflation adjusted to the present, guess what? The number is $1,280. In other words, gold has not gone up at all. It has just gone up in terms of hedging against inflation. But that doesn't mean that a deposit that didn't work way back at $400 now works fabulously at $1,200, $1,300. A deposit doesn't work today when it's just in inflation-adjusted terms. Now, I think, I'm seeing the headlines today on Bloomberg, gold has the most lackluster start to the year in a long time. But gold, after a pretty weak year in 2018, finished off strong, rising from $1,200, where it looked like it wanted to break back down to $1,150, is knocking at the door of $1,300. And this time, there is a different context. I think we are at the start of a sustained uptrend for gold. It's a situation very similar to the late 70s, with the difference that the threats are probably more deflationary than inflationary. But the big problem is what was afflicting the United States back then. They had, hightailed it out of Vietnam after wasting a decade in that. Then OPEC took the screws to them. and then they got kicked out of Iran. The Shah was booted out, and there was a revolution. Their embassy was seized. Their attempt to rescue the hostages fell flat on its face, and Russia, the Soviet Union at the time, pushed into Afghanistan to try and deal with all these jihadists that were heading into their southern empire and stirring up trouble. So it really looked like at the time the United States was losing it, and gold went from $35 at the beginning of the 70s to as high as $850 before settling back to $400. Now, that move from $35 to $400 was an accumulated slingshot effect because gold had been a fixed commodity. Even though there was inflation in the world, gold stayed fixed at $35 an ounce, and so it did some catch up. But the run up to $850, that reflected concern that America was losing it, and we are now at a similar stage. And this time around, the potential audience for gold is substantially bigger than it has historically been. When you went to all these conferences in the past 20, 30 years, the gold bugs were typically railing about fiat currency debasement and hyperinflation, blaming it on irresponsible big government socialists. Well, now we have an irresponsible big government non-socialist in charge, and the gold bugs have become as noisy as crickets in the dead of winter, because it's their man who's now in there, and even though all the problems are still the same, now it doesn't bother them anymore. And this is interesting because gold no longer is the province of a small group of people, ideologically defined. It's now actually possible for a much broader audience spanning the entire economic and political spectrum to embrace gold, because what we are watching is the disintegration of a social order that the United States has cultivated since the end of World War II. We see that today the Brexit deal has been thrown out the window, so we will see a no-deal exit for Britain. The euro, it's probably going to disintegrate as Europe starts to slide into recession and the populists start getting really good reasons to be angry about everything. And there's this problem with this currency decline that people always expect, because there's the TINA issue. There is no alternative to the U.S. dollar. But with everything that's coming unglued, all the currencies are going to be in shambles. We have these countries that have sanctions against them, such as Iran and Russia, scrambling to develop ways of paying for trade with other European countries, and that so as not to violate the U.S. dollar hegemony. We've got China's RMB. If China gets into a pushing match with the United States and it just starts trading with its partners in its neighborhood, they will stop using the U.S. dollar. So we're facing a situation where the U.S. dollar as the world's single reserve currency, that role is being sped up as vanishing on us, or at least people are starting to worry about that. So there is actually an alternative to the U.S. dollar, and it is gold. And you will start seeing more and more money go into gold, and those who do own gold, they will start to think, why should I sell now? I've held it this long. And that will build a real uptrend. And what we're going to see over the next 2 years as this evolves, and it's 2 years before the government will change in the United States. That's the November 2020 election. That's when everything gets possibly reset. So we have 2 years of slow motion implosion with everybody getting angrier, and then gold becoming a natural way for people to soothe that fear that everything is falling apart. And what you'll start seeing is that as the institutions start to come back to the gold market, you'll see these big merged companies start to give back these smaller assets. You'll see these new companies engineered from shelves in which Bay Street's already long, or companies where there are weak assets. They'll combine it with another junior with a stronger asset, and then they'll throw in the bigger asset from the Newmont or the Barrick, and then they'll finance that and get that going. And this process we've seen unfold. We saw that in the noughties, 2003 to 2006. That didn't really help the existing juniors. We are facing a similar situation like that, which is why I think the focus over the next year or two really should be more on discovery exploration juniors. And this brings us back to Great Bear and its Dixie project, which is south of the Red Lake mine, and where they have discovered very high-grade gold mineralization in the hinge fold of a system that's had, considerable exploration in the past, but never the kind of grades that make Red Lake the fabulous deposit that it is. And this company is now bankrolled. They raised $10 million with the help of Rob McEwen last year, and they got a 30,000 meter drill program. And it doesn't matter what Newmont Gold Corp does with Red Lake or thinks about its neighborhood over the next year, because this will evolve and hopefully become, at least a couple of million ounces, and maybe ultimately more, to be a complete standalone. And who knows, it might even end up being something where Newmont Gold Corp decides to create a new vehicle, and maybe they'll combine or sell Red Lake as a standalone company merged with Great Bear. So for exploration companies that are financed, it doesn't matter that the big companies are now going through this process of consolidation and disgorging their projects. But if I'm correct that in a couple of years we have gold trending towards $2,000 without any inflation or fiat currency debasement in there, which means that $2,000 versus $1,300 today is a substantial real price increase, that's when we'll see the juniors come alive in a big way, and these big merged companies will say, oh, well, we have these wonderful, great deposits that we have in production that have huge margins, which are getting bigger, which is kind of what happened with the base metal producers during the super cycle in 2003 to 2008. But now that we have a higher real gold price, we need to go look at all these juniors again, and the cycle will swing back in favor of the juniors, and the big guys will once again all be scrambling to acquire projects with millions of ounces in the ground that are worthless today, but worth an awful lot when gold's at $2,000.
We'll have more with John Kaiser right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're chatting with John Kaiser. John, this weekend you'll be presenting at the Metals Investors Forum in Vancouver, where one of the two companies in your session is ATAC Resources. What is ATAC planning for its Rackla belt in the Yukon?
I have made ATAC Resources not just a bottom fish spec value rated company, but I've also made it one of my favorites. I've got 19 favorites that I've published on December 31st. And I originally had ATAC as a bottom fish in 2006, 2007. It was one of these companies, Yukon prospect generator. It just crawled along at 20, 30 cents forever. But in 2009, the company came alive when a grassroots effort that they had done, which involved taking a soil sample data from regional government sediment sampling program and seeing that in this belt of sediments, 300 million to 800 million year old sediments that have been tilted on their side, bounded by a fault to the south and a fault to the north, 5 to 10 kilometers wide, but stretching 185 kilometers east-west, northeast of the Kino area. Nobody had ever really done anything, and they made the Tiger discovery, which is a carbonate replacement style system. That took the stock in 2009 when we were still limping from the 2008 crash. It took the stock to over $1, and this was what they called a RAW project. It's spelled R-A-U, and it's in the western third of this entire belt. And the key there was what they called a Rakla intrusion. It's some sort of pluton that's come in, and it's cooked all these limestones and created these carbonate replacement and skarn type deposits. But by 2010, the attention had shifted to the far eastern end, what they called the Osiris block, and there they had discovered gold mineralization at surface, also following up gold soil sampling results. And in this case, it had the Carlin Pathfinder signature that you find in Nevada, which has its 300 million ounces that were all laid down in that 42 to 25 million year period. And this is what makes Barrick and Newmont great companies. And this took ATAC to a high of $10 by mid-2011 because here they controlled this entire belt of rocks which had Carlin-type affinities. They had discovered high-grade gold. It was even similar in the sense that when it wasn't oxidized, it was refractory, which of course isn't a very good thing way up in this remote location of the Yukon. And the stock achieved $1 billion valuation at one point, but then it fell off the cliff in mid-2011. But they have managed to raise and spend $100 million, most of it in the eastern part, the Osiris block. And this is where Barrick came in 2 years ago with the middle segment, the Orion block, and spent $10 million following up various ideas, and then walked. And it's unclear whether they walked because Mark Bristow is now in charge and is retreating back to an area where substantial deposits are known. They published a resource for the Osiris last year, which came in about 1.6 million ounces open pit underground at 4 grams per ton. That's not high grade enough to be developed there, nor is it large enough. But the other question is, did Barrick see something about the geology that made them decide, this area just doesn't have it. But the whole area has not really seen the kind of regional exploration that it needs. Much of this $100 million has gone into a particular area in the Osiris area, chasing the system there. And what the project really needs is a $10 million regional geochemical sampling program on some sort of 200-meter grid to find out where along this belt are other potential hotspots for gold mineralization. And so even though Barrick has for now walked, it still has 19.9% of ATAC. That entire sort of eastern two-thirds, which has this Carlin Pathfinder chemistry, really the jury's still out on whether or not there is something substantial there. And you got to keep in mind that the Carlin trend itself was for decades just this pitiful little Carlin open pit before the deeper drilling finally figured out what that was really all about. But the company has realized we spent $100 million, we have $10 million left. We can't keep doing more of the same. The market would crucify us if we spent $10 million on this regional program, which would take maybe 1 or 2 years so that we can sort of zoom back and get the big picture and then start spending tens of millions of dollars. This is a company, a project for a big group like Newmont or even Barrick, and maybe in a couple years they will be back. But the ATAC itself is now going back to the origins in the raw area. And this time around, they are focusing on the eastern part of the Rakla Pluton. And this was an area where they had picked up some, soil samples back in 2010. They had picked up, the field crew went in this kill zone area, which is where the trees have all died because the underlying mineralization makes the soil toxic. There was no outcrop, but they did get cobbles in that. And it became this thing for Julia Lane, who was exploration manager back then and who is now the VP of exploration, says we have to revisit that. And last year, they went back to this target area, which they call Bobcat, and they pitted down to the bedrock and came up with a very high grade copper gold skarn type mineralization, similar to what Sun Metals has lucked into at the Stardust project in central British Columbia. So the program for 2019, and this is a reason why I've adopted it as a favorite, is we're going back to this area where we do understand where the heat engine is, what it has done to the surrounding carbonates. We have an area where this is more skarn than carbonate replacement, but it's all part of the same model. We have very high-grade values. This is the only part of that area that has copper values. The parts to the west have more sort of zinc, lead, silver, gold values. And it's tree-covered except for that kill zone, so they got to go in there and do some geophysics, and they will probably have to do a RAB drilling program to get down to bedrock and collect some sort of surface sample and map that area and see if they have a significant target that's worth drilling come September. And in that particular area, they can drill, probably till mid-November. So we have this very big picture Rakla Belt story. We've had, the blue sky of finding, tens of millions of Carlin-type ounces. And now we're going back to the origin in the western part and focusing on a high-grade skarn copper gold target in a geological context where we understand what the likely controls are, whereas in that whole sort of eastern part, what the controls are for a Carlin system is generally a mystery until you've actually found them in its particular location.
We'll have more with John Kaiser right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Welcome back. We're speaking with John Kaiser. John, the other company in your Metals Investors Forum session in Vancouver is PJX Resources. Is this a good junior for Discovery Watch to follow?
I think it is. It is a new company I've never really written much about. I've mentioned it in passing, covering Highway 50 and its Monroe project. Monroe project we've talked about a fair bit on Discovery Watch. This is the Leask brothers with their theories that there is another Sullivan 2 deposit down at the 1,200 meter level. They have taken multiple shots at it over the past few years. The last was in the last quarter of 2018, and they just couldn't get the drill to the sweet spot where they think a massive sulfide zinc, lead, silver deposit is squirreled away, and it's inconveniently situated right underneath Monroe Lake, so they cannot really just sit on top of it and drill down. And Highway 50 is right now figuring out how it's going to raise money to go in there and try and reach that target at around 1,200 meter depth. But meanwhile, PJX Resources, which went public in 2011, headed by John Keating, it is about to start a drilling program. There is a shallower target, but there's also a deeper target. And this is on the Vine property that is just to the east of the Monroe project of Highway 50. And that project has seen a lot of work in the past. In 1976, zinc, lead, silver, massive sulfide mineralization was found in the Vine showing. That turned out to be a vein-type deposit, but everybody thought it was a Sullivan II. The tentacles of a Sullivan II, Kokanee and Ramrod were part of that promotion in the 90s. But eventually they realized, well, this thing is just a little nothing that's not attached to anything. Just like the Fours, little SEDEX smoker system that's to the west of Monroe project, also turns out to be just this little thing all by itself, not connected to anything. But a few years ago, PJX did some gravity surveys on the Vine project, and they developed two large gravity highs, suggesting something very dense. One in the sort of northwestern part of the project, and one in the southeastern part of the project. And they did some deep drilling, and the results were generally disappointing. But in the southern part, there were anomalous zinc-lead values. And so now they've done a magnetotellurics geophysical survey in November, and it has shown that the reason the earlier holes missed is because the massive sulfide body that they're now seeing, or interpreting to be a massive sulfide body, is plunging off, starts at a depth of about 600 meters, and it's located in an area where one could argue that the Vine vein is potentially related. And whereas the Sullivan deposit itself is a SEDEX deposit, the sedimentary exhalative, a smoker system that's, it's been faulted, but it's generally preserved, and the search has always been for something like that. John Keating thinks that what's happened here in this area of the Vine, just to the east of the Monroe target, is what was once a SEDEX deposit, similar in scale to Sullivan, but because it's close to that Moyie fault, has been metamorphosed and folded, more similar to the Broken Hill deposit in Australia, and this could explain why there is like the Vine vein sitting there all by itself. In essence, an original SEDEX deposit that has been remobilized and stuff moved around. So this drill program, it's a high-stakes, deep program. There's one shallower target. It's set to start in mid-January. I think there's going to be a lot of interest at the show, the Metals Investor Forum show. My session starts at 11:30. ATAC and PJX are in that session, and if they do demonstrate that there is a substantial body on the Vine project, this will also breathe new life into Highway 50's Monroe project, because quite likely this is all the same setting, and maybe the Leaks brothers are focused too much on an undisturbed SEDEX model in terms of what they have been chasing in that area. And if we get finally a Sullivan II type discovery in this part of southeastern British Columbia, southwest of Cranbrook, it will put a lot of eyes in that area. It'll jumpstart Eagle Plains' Iron Range project. And in the case of PJX, when they went public in 2011, they also did it with this portfolio of gold prospects covering the upstream likely sources of the 1 million ounces of placer gold that have been hauled out of the drainages in that area. And they've been busy developing orogenic targets. These are going to be more quartz vein, shear hosted type systems, but they have that gold play as a fallback story, and it's also in that area. And who knows, maybe Teck on the DD project that they've optioned 75%. They drilled a 1,400-meter hole in the fall. They have yet to report anything. Obviously, they did not hit Sullivan 2, and from what I hear, they're trying to figure out where exactly in the stratigraphy are we. Are we close to the Sullivan 2 horizon? But Teck is also a substantial landholder in that area just to the north of the Moyi Fault. And the Moyi Fault is this big regional fault south of which everything is hopelessly deep, but that would certainly stimulate activity in that whole area if PJX gets lucky on this target, that it is indeed not just some pyrrhotite body, but actually a massive sulfide zinc, lead, silver discovery.
John, looking forward to seeing you at the Metals Investors Forum in Vancouver this weekend.
We'll see you on Saturday, Jim.
I was speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.